all central banks are facing the same problem. And it's a problem of their own creation. And it's, I will argue, an intentional act, not an unintentional act, because governments, as they consolidate power, spend. Why do they do that? Well, because it's profitable for them and their cronies. And, I was amazed. I actually was amazed by this, that I think it was Mitch McConnell actually said on television, don't worry about all this money that's going to Ukraine. It's not going to the Ukrainians. It's going to us. It's going to our companies.
On Wednesday, the United States stock market experienced a decline as investors grappled with the unexpected news of a sudden reduction in the United States sovereign credit rating, shifting from AAA to AAA+. Simultaneously, Treasury yields inched upward as the dollar strengthened. This alteration followed the release of private payroll data that indicated the resilience of the U.S. labor market. Fitch, one of the prominent credit rating agencies, lowered the U.S. sovereign credit rating from AAA to AAA+, citing fiscal deterioration as the rationale. Notably, this change marked the second instance of a major rating agency, after Standard & Poor's, downgrading the credit rating. Eric Winograd, the chief economist at AllianceBernstein in New York, noted that the market displayed minimal reaction to the downgrade news, implying a sense of stability. Winograd asserted that the prospect of the U.S. defaulting on its debt payments isn't seriously considered, anticipating continued demand for both long-term and short-term treasuries. Mark Yusko, a renowned hedge fund manager and the founder of Morgan Creek Capital Investments, shared his perspective on the downgrade's implications. During his latest episode of the Roundup series with Blockworks Macro, Yusko discussed the United States economy's precarious state and emphasized the significance of Bitcoin investments. He cautioned that while the downgrade might not trigger immediate panic, it serves as a foreboding indicator of potential challenges ahead for the U.S. economy. Yusko highlighted the gradual trajectory of the United States towards a situation akin to Japan, which officially reports a 264% debt-to-GDP ratio according to the IMF.
Probably way back when in history there may have been something, but no, it's not normally seen as an option. Therefore, the idea of downgrading from AAA to AA kind of seems odd. On the other hand, basic supply and demand, right? The price of those bonds is falling because there's excess supply and limited demand. And if that trend continues, which it appears that it's going to at the rate that our government keeps spending, I think it's not a full-on panic yet, Mike,
Yeah.
but it could turn into one. And panics can get ugly in a hurry. Here's a couple things that are happening in Japan. I'm glad you bring Japan up. So if I asked listeners, what's the best performing global market this year? Most people would say the United States, right?
Yeah.
Very few would say, well, wait a minute, Europe's outperforming the US and actually Japan is outperforming both of those. And then emerging markets are a distant fourth. Japan stocks have been en fuego. I mean, completely en fuego. And part of that's because their return on invested capital has been the same as US companies. Now, their ROE has been much lower because they're not very capital efficient. They keep too much cash on the balance sheet. They don't do M&A. They don't do restructuring. They let bad businesses kind of just go on. Sounds like what we were doing there for a while. And so the only way out for Japan for years has been to weaken their currency. And if you ask again the average person, how's the yen doing this year? I think people would say, I don't know, it's probably flat. No, it's down 9%. And that linkage between devaluing their currency and appreciating stock market has been really strong for Japan. And part and parcel of that was that Japanese rates, particularly the 10-year rate, was kind of capped. There was something called yield curve control. And it was managed by this guy, Hiroki Kuroda-san, and he retired. And Crazy Croton is gone. They got this new guy, and he said that he was going to give up this yield curve control. And now it looks like a bigger move than it is, but on a percentage basis, it is a gigantic move up in rates. And the real problem is, as bad as the US government budget deficit is, meaning interest on US government debt now is bumping up against the highest level it has ever been. Okay. Now, you think about that.
Yeah.
Well, what does that mean? Well, we can't not pay the interest, right? Or then we default, which is what Fitch and others are making subtle noises about. Well, we can't afford to pay the interest if we issued all the bonds at 0 and now rates are 5 on their way maybe to 6. How do we pay that interest? Well, this is what Japan has faced. And for years, their rates just stayed at 0. They just kept them at 0. And Kyle Bass for years would scream about how these guys had to default and there was no way they could balance the budget. And they hit 100% debt to GDP, then 150%, then 200%. And now they're at 225%, 226 or something like that. That's unfathomable for where we are in the US. It's just over 100, but probably prophetic, probably the way we're headed.
Japan is deeply entrenched in a prolonged monetary easing cycle, featuring one of the world's lengthiest negative rate regimes. This trajectory is likely to be mirrored in the United States due to its growing debt-to-GDP ratio. Former hedge fund manager James Lavish encapsulates the situation in tweets, showcasing the unsustainable debt scenario highlighted by the U.S. Treasury. Lavish presents 3 strategies to alleviate debt: austerity, raising taxes, or allowing for higher structural inflation. However, all approaches carry challenges. Lavish also emphasizes the swift decline in foreign demand for U.S. Treasuries. In line with this perspective, Mark Yusko's interview underscores the urgency of Bitcoin as a safeguard against an imminent collapse, given the United States predicament.
All central banks are facing the same problem. And it's a problem of their own creation. And it's, I will argue, an intentional act, not an unintentional act, because governments, as they consolidate power, spend. Why do they do that? Well, because it's profitable for them and their cronies. And, I was amazed. I actually was amazed by this, that I think it was Mitch McConnell actually said on television, don't worry about all this money that's going to Ukraine. It's not going to the Ukrainians. It's going to us. It's going to our companies to, buy bullets and bombs and stuff. So, wow, he just admitted that it's just graft and corruption. So that proclivity to spend isn't going away. But here's the little problem, and Lynn Alden pointed this out, and I don't know if she sourced it or if she took it from someone else. It doesn't really matter, but she's the one that I'm stealing it from. U.S. tax receipts just plunged to the lowest level ever. Now, not in dollars, but in rate of change. And that is bad, right? Because if you're spending too much and you're not bringing in enough revenue, what happens? Well, what Fitch says, in theory, you could default. Now, they're not going to default because that would be disastrous if the global risk-free asset suddenly had risk. But I think it means a lot of things for global currencies, I think, are going to continue to weaken. Therefore, it actually has implications for Bitcoin, which, remember, Bitcoin doesn't change. One Bitcoin is one Bitcoin. It's just the price that we price it in changes. The asset that we price it in changes. And those are all, I think, going to get worse.
In her July newsletter, prominent macro analyst Lynn Alden draws parallels between Japan's current economic state and the potential direction of the U.S. economy. Alden suggests that the U.S. might follow Japan's example, which has reached a point where interest rate hikes are no longer effective against inflation due to its precarious situation. Unlike Japan, which began its spiral amid rapid globalization, Alden notes that the U.S. faces tougher challenges due to several factors. Firstly, Japan benefited from a globalization wave that aligned with China's surge in production, mitigating labor shortages. Secondly, Japan's per capita healthcare spending is less than half of the United States despite having an older median age. Alden warns that when the US reaches Japan's average age, healthcare costs might be 3 times higher. Thirdly, the US allocates a greater percentage of its GDP to the military, with a reckoning coinciding with heightened geopolitical conflicts, unlike the more stable period from the 1990s to 2010s. Alden, much like Yusko and Lavish, advocates for ownership of hard assets like Bitcoin, which she deems an optimal asset to weather the impending challenges faced by the United States. This prompts consideration: how long can the US sustain its massive debts before succumbing to the weight of its $200 trillion burden? Your insights, opinions, and observations are welcomed in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.